Meanwhile, in a report published on Thursday afternoon, the International Monetary Fund urged fresh stimulus from the European Central Bank to mitigate rising economic dangers, causing stocks to slide into the red. The IMF warned that the Eurozone economy faces rising risks from trade tensions, Brexit, and Italy. In corporate news, Chinese tourism group Fosun said it is in advanced talks with Thomas Cook lending banks to inject £750 million into the London-listed travel operator. Well, let's bring in Juliana from our London studio for more update. Hello, Juliana. Good afternoon again.
Good afternoon, Chimi. Thank God it's Friday.
Thank God it's Friday. Now, are the markets in London also reading the new Chinese trade data?
Well, Chinese trade data appears to have surprised traders here in the city. On the one hand, there's that 11% increase in the trade surplus with the US last month, which of course market analysts didn't predict. But then, of course, Chinese imports have fallen 7.3%, whereas economists had been expecting a decline of a much less 4.5%. All in all, this data points to further weakness in the world's second largest economy and declining global growth. Looking at the numbers, despite the poor data from China, the FTSE is still in positive territory at intraday. The all share is up 0.28%. The FTSE 100 is up 0.23%, and the FTSE 250 up 0.47%. In currencies, sterling still up on the US dollar by 0.05%, down on the euro by 0.01%, and down on the Japanese yen by 0.13%.
And how is the shares of Thomas Cook doing at the moment after Chinese tourism group said that it is in advanced talks with it to inject about £750 million into the travel company?
Well, Chimi, after months of speculation, the company did announce today that it is in advanced talks with the Chinese investor Fosun, who are already the largest stakeholder of Thomas Cook. And as soon as that decision was announced, shares plummeted 40%. And this is coming at a key time in the summer holidays. Of course, Thomas Cook has been in British high streets and dominated the British travel agent scene for over 100 years. And holiday makers are extremely worried, as the bosses have said that if this deal does indeed go ahead, then the company could be split into two by 50%. So it would be interesting to see how those shares dovetail over the next couple of weeks. But a pretty sad day, as we've discussed several times on your show. The British retail high street is severely suffering, and of course, in the light of Brexit, travel is suffering too.
And what other corporate headline is noteworthy today, and what is the outlook for next week?
Well, we discussed this morning Jill McDonald, the boss of Marks & Spencer's struggling clothing business. She's resigned from her position less than 2 years after joining the retailer. A lot of people has suggested that she was pushed out by the boss there. Shares in the Japanese consumer electronics company Nintendo have soared to a 9-month high following their recent announcement of a cheaper version of its flagship console. And HSB is expected to pay out millions more in compensation to credit card customers who were overcharged when they fell behind on their payments. Of course, as well, Chimi, on Sunday, that's the deadline for Conservative Party members to vote on who will be the next Prime Minister and the leader of the Conservative Party. Boris Johnson is the front runner, but he is facing stiff competition from Jeremy Hunt, the Foreign Secretary at the moment. And a lot of people are saying, you know, they're both fighting towards who could be the best Brexiteer of them all. So we'll be giving you complete updates with that next week.
Sure, we'll wait to see. And of course, we'll look up for the vote coming up on Sunday. Now I can say thank God it's Friday with you, Juliana. Thank you for your time.
Thank you, Chimi.
And stocks in major Asian stock markets mostly closed higher on Friday. Meanwhile, China's trade with the U.S. declined in the first half of the year amid an impasse between the two economic giants. The Nikkei 225 in Japan closed 0.2% higher at 21,685.9, while the Topix index fell 0.15%. Over in South Korea, the Kospi advanced 0.29%. Australia's ASX 200 slipped 0.29%. 0.4%. Mainland Chinese stocks rose on the day, with the Shanghai Composite up 0.44%, the Shenzhen Composite 0.506% higher. Hong Kong's Hang Seng Index added 0.23%. And in the U.S. stock index futures were slightly higher on a Friday morning amid optimism rooted in expectations of a Federal Reserve rate cut later this month. Around 6 a.m. Eastern Time, Dow futures indicated a positive open of more than 85 points. Futures on the S&P and Nasdaq were both seen higher. Federal Reserve Chairman Jerome Powell suggested on Thursday that the U.S. Central Bank has room to ease monetary policy at its next meeting. Meanwhile, Trump said in a tweet on Thursday that China was not living up to promises it made on buying agriculture products from American farmers. On the data front, investors are likely to closely monitor producer price index data and core PPI for June at around 8:30 a.m. Eastern Time. In corporate news, Infosys will release their latest quarterly earnings before the opening bell. And back here on the African continent, Kenya's Nairobi Securities Exchange has launched the trading of futures contracts known as the Next Derivatives Market, offering investors index futures and single stock futures of the most heavily traded companies on the bourse. The chief executive of the NSE, Jeffrey Ondundo, says that the Next Derivatives Market will offer investors risk management tools in the wake of increasing asset price volatility in both domestic and international markets. The listed futures, which will have quarterly expiry dates and will all be initially settled in cash, allows investors to diversify their portfolios and deploy capital more efficiently. The futures are expected to deepen liquidity on the exchange, which has 65 listed companies, and will offer investors index futures contracts on the NSE 25 share index and single stock futures of on Safaricom, KCB Group, Equity Group, EABL, and of course BAT. All right, we'll take a quick break, and when we return, we'll turn our focus to South Africa for updates on the economy and, of course, the market wrap-up there. To stay with us.